Today I want to talk about how tons of new synthetic tokenized AMC securities have just been found. Not the FTX and Bittrex tokens, but even more. I want to talk about what this means for the AMC stock, whether AMC will be taking legal action or not, and how this impacts the AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So I want to start by talking about whether AMC will be taking legal action or not, and whether these tokenized securities will be deleted from these exchange platforms. Will these market makers be forced to unwind their false locates as they use these tokenized securities to locate shares of AMC that are available to short? Obviously, these tokenized securities were never actually real AMC shares, and therefore these market makers simply created synthetic AMC tokens in order for these hedge funds to locate and short. Therefore, will these tokenized securities be deleted from these trading platforms, and will these market makers be once again forced to go into the market and either locate real AMC shares to short, or once again try and kick the can and find another way to false locate false shares? If that is the case, will these synthetic shares have to be deleted or their positions unwound and closed out unless the market makers can locate real AMC shares or once again find another way to kick the can? So Pip and Sammy has tweeted saying, can anyone explain how AMC is able to become tokenized? How have these platforms actually created tokenized AMC securities? Does it have to be with AMC's consent? He said, does AMC or the shareholders have any say in the matter? He said, to me, it all seems like it's a place for the devil literally to be in the details. Now you may remember this email from John Merriweather, the Vice President of the AMC Investor Relations Department. He said, thank you for your email. AMC is aware of public reports regarding FTX's bankruptcy. He said AMC has no affiliation whatsoever with FTX. AMC has never authorized any tokenized AMC shares, nor benefited in any way from any tokenized shares. And therefore this is really interesting because obviously these tokenized securities have been created without AMC's permission in any kind of form. Therefore these tokenized securities have been created and tied to AMC's underlying price without AMC's explicit permission. Therefore at the very least they've committed a copyright infringement, if not something significantly more illegal. And therefore I do think it's unfair to blame Adam Aaron or John Merriweather for the creation of these tokenized securities, considering they never gave any form of permission. And he also said that any inquiries or complaints related to these securities should be directed to the appropriate regulatory authority. And therefore, considering that AMC never provided any authorization whatsoever, I believe it's likely that AMC will be taking legal recourse against FTX and against all of these platforms that have listed these tokenized securities and created them without the AMC permission. And Rattoy has also tweeted about two more places where they made fake ape tokens. Number one, we have BitPanda that seems to be selling ape preferred equity. We also have currency.com that seems to be selling the exact same thing. Now these two platforms are very interesting, and I'm going to explain why. With FTX, they had a circulating supply or a maximum supply of 400 million tokenized securities. With Bittrex, they had a circulating or total supply of 600 million. Therefore, together, there was a maximum supply of 1 billion tokenized securities. But on currency.com, we've got the token name, the currency, the margin, the stock exchange, the funding fee, and all of the details of exactly what security is being traded, but we have no evidence whatsoever of a maximum or a circulating supply. Therefore, it seems unusual, but I imagine there would be no issue if I logged on to currency.com and attempted to buy 100 million or even 500 million or maybe even 1 billion of these ape preferred equities. And you can even use leverage of up to 20 times on this platform. Therefore, if I placed an order to buy 1 billion shares, it would only cost me 50 million shares worth of actual money to buy those billion shares. And again, on the BitPanda page, it doesn't show any evidence of the maximum number of shares in issue or the maximum number of shares in total or any evidence of a circulating flow. Interestingly, here on BitPanda in the asterisks, it says that BitPanda stocks are contracts replicating an underlying stock or ETF. Now that's very interesting because it sounds exactly the same as a total return swap, but I'll talk about that a little bit later. On top of that, if you go into their prospectus, it says it's expressly pointed out that the tokens are not stocks or ETFs, but derivative contracts which represent the respective value of the stock or ETF on a one-to-one basis. And it also says that BitPanda is entitled to include further tokens in the offer at any time, basically saying that BitPanda at any time can create more tokens and sell more tokenized securities or sell more ape shares. This is basically saying that if I buy 500 million of these ape tokens, they should technically go into the market and buy 500 million ape shares. but they're then also authorized to sell me more ape tokens and buy more ape shares. Technically, it should be linked to AMC on a one-to-one basis, but I could buy 500 million and then they could sell me another 500 million on top of that. And from their help desk section, it says this feature is made possible through a structure called a derivative contract. It works as follows. BitPanda purchases stocks, ETFs and ETCs and holds them securely with a custodian bank. Based on this portfolio, BitPanda issues fractional shares to users and you can therefore invest any amount you like, and 100% of the underlying assets are safely held at our custodian. And interestingly here it says as the owner of a derivative you participate in the increase and decrease of an asset's value, as well as in financial advantages and disadvantages, but other rights resulting from the ownership of the asset are not transferred to you, which is the exact same as a total return swap contract. But really it's then also refreshing and confirming that BitPanda also owns underlying securities and holds them securely at a custody bank. And therefore it seems like these tokenized securities on currency.com and BitPanda may be even worse than the FTX and Bittrex tokenized securities, because these ones seemingly have no limit to the number they can actually create or no limit to the number they can actually sell. Even though these tokenized stocks are supposedly backed one-to-one with real ape shares, there's seemingly no circulating flow or no limit to the number they can create and sell. And on top of there not being any limit, they're also entitled at all times to issue further tokens and therefore supposedly buy more underlying stocks, even if there's none left remaining. As I said, I do believe that AMC will be taking legal recourse because they never authorized any tokenized AMC securities. Therefore, these platforms have been using the AMC name without their permission. Now, I do think that it would be very, very interesting if AMC does actually take legal recourse against these market makers and against these platforms, and if they are indeed forced to delete these tokenized securities. I think it would indeed force these market makers to entirely rethink their previous short locates. As far as I'm aware, right now, tokenized securities are the only way that these market makers are getting away with providing false share locates. They're not actually using their market maker exemption to create these synthetic shares because those synthetic shares still have to be delivered by the FTD dates. They're using these tokenized securities for their false share locates, which they're technically classing as real share locates because obviously these tokenized securities are supposedly backed on a one-to-one basis. But obviously if there's no more tokenized securities, there's no more false locates, and these market makers actually have to go and locate real AMC shares. Obviously, if they can't locate real AMC shares, which they won't be able to as there's none left, they will have to create these synthetic shares, which should be covered by the FTD dates respectively. Now, whether these FTDs are or aren't actually ever really covered is a whole nother kettle of fish, but it completely removes one entire way of kicking the can, which is those false, real, false locates. Without those false, real, false locates, we wouldn't just be seeing 5 million or 8 million or 10 million or 15 million AMC and APE FTDs on a daily basis. We'd be seeing hundreds of millions, potentially 500 million FTDs in a single day. It really depends on how many synthetic shares have been stacked up and how many synthetic shares were created using these false, real, false locates. And obviously if all of these false locates are removed at the exact same time and all of these platforms are forced to delist their AMC tokenized securities, it could be an absolute nightmare for these market makers. On top of that, something very interesting has just happened with the S&P 500 as tweeted by Composite Dave. He said, as discussed, we've broken the uptrend, so I'm expecting a deep retracement. Obviously, for the entire of this year, the S&P 500 has been on a steep downtrend. However, over the last couple of months, since October, the S&P 500 has been on an uptrend, which has been a bull trap. And it seems the S&P 500 has now reached the upper area of this downward trend and has bounced off the trend line and is now moving back downwards. Therefore, the S&P 500 is expecting a steep retracement, potentially all the way down here to below 300 points. Obviously, as the S&P 500 continues falling further, the market crash does continue and does exacerbate, and more hedge funds will be going bankrupt, they will be insolvent, they will be failing these margin calls, and they will be liquidated. And it seems like the next leg down of the market crash has just started, as over the last few days we have again bounced off this upper area of the downward trend line of the S&P 500 and seem to be making our way downwards once again. And as Suspended POS tweeted, he said, "I want Apple at $100 at least, and to take the S&P 500 with it to 315 points or below." And he said that's when the poop will hit the fan for the shorts and panic will set in with less liquidity. And obviously when the panic sets in for the shorts and when this poop hits the fan, these shorts will be forced to close out of their short positions. Guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.